Have you thought about investing in stocks, but don't know where to start? There are several types of stocks you can consider, and each has its own benefits and drawbacks. Understanding the different options available to you will allow you to better plan your portfolio and find a strategy that works well with your goals and risk tolerance. Here are 4 types of stocks you should consider adding to your portfolio. 1. Blue chip stocks. Blue chip stocks are the backbone of a portfolio. They are large, well-established companies that provide steady dividend payments. They are also less volatile and have a low risk for investors' portfolios. A blue chip stock is often defined as a company with a market cap greater than $5 billion and an average trading volume greater than 500,000 shares per day. Some examples include Exxon Mobil Corp., General Electric Company, AT&T Inc., Walmart Stores Inc. Benefits of blue chip stocks are their long-term stability and their ability to weather economic downturns. The downside is that they don't typically pay dividends very frequently, every 3 or 4 years, so it can take some time for investors to realize any return on their investment. 2. Dividend stocks. Dividend stocks are a good option for passive income and capital appreciation. These types of stocks pay dividends to shareholders, which typically come in the form of cash or shares. Dividends can provide a stable stream of income that can help grow your portfolio over time. The downside is that you don't get voting rights with these types of stocks and they may not be as liquid as common stock. However, if you're looking for a low-risk investment with high yield potential, then this could be an excellent option for you. 3. Growth stocks. Growth stocks are the growth and income players in the stock market. They are usually stocks that have been around for a while, and have proven themselves by growing their profits over the last 10 or more years. Growth stocks usually have a high price-to-earnings ratio, which means they cost more than other types of stocks. Even if you only invest in one type of stock, it's best to make sure you diversify your portfolio with different types of growth stocks. Examples of growth stocks are Facebook and Amazon. 4. Index funds. Index funds are a low-cost way to invest in the stock market. They're passively managed, meaning they track an index like the S&P 500 or Nasdaq Composite and don't require much maintenance. Index funds are a great place for beginners to start because there's no guesswork involved when it comes to picking individual stocks. Index funds also offer diversification, which reduces risk by spreading your money across many different companies and sectors instead of putting all your eggs in one basket. And if you're looking for broad exposure, index funds can give you that with just one purchase. If you want more control over your investments but still want some diversification, exchange-traded funds, ETFs, may be right for you. Please subscribe to Capital Investments.